Hello, welcome to a weekly technical analysis review for Monday, November the 5th. I'm Rafat Boyajan, currency analyst at XM.com, and the pairs we're going to be looking at for this week are the pound dollar, the euro yen, and the Kiwi dollar. Starting first with pound dollar, we can see that the near-term bias for the pair is slightly positive at the moment. The RSI is fairly flat, just above the 50 neutral level. We can see though that the MACD, although it has crossed above its red signal line following that strong rebound over the past 2 to 3 days, the MACD histogram remains in negative territory, so we will really need to see additional gains for pound dollar before there are more convincing signs of a new uptrend. At the moment, prices are being capped by the 100-day moving average. That's just below the just above the 1.30 level, and then not too far above the 100-day moving average. It is the 38.2% Fibonacci retracement of the upleg from 1.2661 to 1.3297. That's around 1.3054. So a break above 1.3054 would help strengthen the upside momentum. We could then see prices targeting 1.3147. That's the 23.6% of Fibonacci before the pair is able to re-challenge that September top just below the 1.33 handle. In the medium term, the outlook has been fairly neutral since August, so break above 1.33 would help, would potentially signal a shift to a more bullish one in the medium term. However, if prices were to if they were unable to climb above the 100-day moving average and we see a downside reversal, we could then see that August low 1.2661 coming back into scope and potentially the return of a bearish phase. But between the current price action and the 1.2661 low, we could likely see support initially at the 50% Fibonacci at 1.2979, and then a key level at 1.29. That's the 61.8% Fibonacci, and then just below the 1.28 level at 127.91. That's the 78.6% Fibonacci. Let's now turn to euro yen. We can see there's been a bit of a rebound from that 2-month low 126.62 from October. However, the RSI hasn't managed to cross the 50 neutral level. It's flattening just below it. There is resistance coming from the 100-day moving average at 129.40. We would need to see a break above that 100-day moving average, and even better if there was to be a climb above the 129.87 level, which is a 50% Fibonacci retracement of the downleg from 133.12 to 126.62. That would help shift the near-term bias to a bullish one, and then we could see euro yen heading towards the 61.8% Fibonacci at 130.64 before being able to head towards that 5-month high of 133.12 we saw back in September, and then that could signal a shift to a medium outlook in the medium term. However, if that 100-day moving average resistance holds, we could see euro yen heading back towards the 23.6% Fibonacci at 128.15, and then a break below that. We can see that 2-month low 126.62 coming into range, and then a drop below that low. We could then see euro yen falling towards that August low of 124.89, and then possibly dipping into a new bearish phase. If we have a look at the stochastic oscillators, though, it is hasn't quite crossed into overbought levels and still appears to be rising, so we could possibly see additional gains in the coming days. Let's now turn to Kiwi dollar. It is looking quite bullish at the moment in the short term, at least for the pair. RSI is slowly climbing, hasn't reached overbought levels, so there is scope for additional gains there, and we can see the MACD has turned positive for the first time since all the way back till April, so possibly that could be a signal of an end to the long bearish phase for Kiwi dollar, which has been in place since the spring. At the moment, prices are being capped by the 100-day moving average, as well as the prices finding it difficult to cross above that September top of just below the 0.67 level. So if we were to see a break above 0.67, we could then see the 123.6% Fibonacci extension of the downleg from 0.6698 to 0.6423 coming into range. Above that, the next key resistance would be the 0.68 level. That's the 138.2% Fibonacci extension, and then we could then see Kiwi dollar heading towards the 200 moving average and would be entering a bullish phase in the medium term. At the moment, the medium term outlook is still fairly bearish, though it's now looking a little bit more neutral following the recent gains. If that 100-day moving average resistance level holds, we could see price action dipping back down again, initially towards the 61.8% Fibonacci at 0.6593, and then below that we've got an important support level, which is where the 50-day moving average is converging with the 50% Fibonacci at 0.6560. A drop below 0.6560 would shift the focus back to the downside, and then we could see the 0.65 level coming back into focus and then below that we have that 2.5 year low of 0.6423 from back in October, and then obviously a drop below that would see Kiwi dollar returning into a bearish outlook in the medium term. That's it from me. Thank you very much for watching and have a great day.